Hello family, thank you for tuning into this video today. I've got something pretty exciting here, I think, for property investors. So if you're a property investor and you've been looking to buy an investment property or researching markets in regional Queensland to potentially invest in, then I think you're going to get some tremendous value out of what's going to be covered in this video today. Because what I'm going to be doing is I'm going to be looking at the top 6 hottest suburbs right now in regional Queensland when it comes to online search interest rates. So online search interest rates is the data from realestate.com.au basically saying that here are the top suburbs where people are looking for property in, right? And that's a really good gauge to measure demand. So when you find these suburbs that have extremely high demand, and if there is low levels of supply, that can be a great market potentially for you to invest in. So we're going to work through these 6 here, guys, and they could potentially be a great place for you to park your money in 2025. So this is for anyone with a budget of under $600,000. Stay tuned, guys, and again, thank you for being here today. Now, just quickly before I get started, I want to introduce myself. My name is Troy Simbassini. I am the owner and head of research of Life Buyers Agency. Life Buyers Agency operates in regional Queensland on the ground under these 2 subsidiary brands here. So we've got Capricorn Life servicing the Rockhampton, Mackay, Gladstone and Bundaberg region, so central Queensland focus, and we have boots on ground in all of those locations. And then in North Queensland, we operate under the brand called Tropical Life servicing Cairns, Townsville and surrounding regions. So I suppose our aim and mission is to support home buyers and investors in these locations by providing on the ground perspective to help you mitigate your risk and maximize your upside potential. So we've been around for, going close to 7 years now, purchased more than $250 million worth of residential real estate in these markets. And yeah, we're generally helping those that are struggling to get into these markets. And these markets are quite hot right now. It can be very difficult to navigate. So if you feel as though you are an investor or a home buyer that falls into, that category of buyer, feel free to reach out to me and the team. You can give us a call on that number, visit that website. We've got a bunch of socials as well. I've got a bunch of socials that you can click on and have a look at a lot of our case studies and previous purchases. Now, as I said at the beginning, I'm going to work through 6 suburbs right now in regional Queensland that have the highest search interest rates on realestate.com.au. And as I said, that is a great way to diagnose, temp check, and measure the demand of a suburb. Look, that's not the only demand side metric you can use, but let me tell you, it's a really good gauge to understand if that suburb is hot or not, because almost every buyer, 99% of buyers, are using generally those portals like realestate.com or Domain when they are investment hunting or house hunting. So that's why I really like looking at this data, and we're going to look at this data today and have a look at these individual suburbs. And then we're going to sort of break down why I think the demand is so high, and then we're going to look at some other data in relation to the suburb to see if it could potentially be a good investment proponent for you. So without further ado, let's dive in to the first suburb. Now, the first suburb is called Svensson Heights in Bundaberg. So that probably sits, what I would say, on the southern corridor, in a southern corridor of Bundaberg. And it's got a bunch of data here that I'm going to work through now. So it has a median house price currently of $480,000. So with that $600,000 budget, you can still well and truly get into a market like this with a lot of buffer there to get to that $600,000 price point. So you have the best part of $120,000 under that $600,000 price point right now. But as you can see, every property that goes online in Bundaberg, it has roughly 955 unique property views. Now, when that's benchmarked to the rest of Bundaberg, that's getting roughly about 150 to 250 more clicks on average than any other suburb in Bundaberg right now, besides Bargara. So Bargara is probably the only suburb right now that's outperforming Svensson Heights. But if you know Bundaberg and are familiar with that area, Bargara is one of the nicest areas on the Bundaberg East Coast, but that has a median house price of close to $800,000. So well and truly out of the, I suppose, price range or budget for anyone with that sub $600,000 buying power. Now, working through this suburb, you can see here that that median sits at 480,000, and the median rent right now you're probably looking at around $525 per week. And look, this is averages here, so like by all means, there's going to be property sales that are going to be higher than the 480, and there's going to be properties that are going to be renting for higher than 525, and even lower than those price points as well. So I'm just using median data here. So just be sure to go in and do your own individual research when you're looking at these suburbs. But you can see here, if you were to go and buy the typical dwelling in Svensson Heights for 480,000, and you were getting $525 per week rent, you'd be looking at roughly a 5.6% yield. And that's a pretty good yield in the current interest rate environment right now. I'd say most properties in regional Queensland, if it's returning above a 5.5% yield right now, you're doing very good. And obviously, the closer to 6% you are getting, you're starting to move towards a really good deal where it's costing you very little to hold that individual asset. But again, if you bought a property for 450,000 and it's renting at 525, you're probably looking at a closer to 6% yield there. If you're buying in Svensson Heights and you're probably buying something at 550 and it's returning 525 rent, you're probably getting something below 5.5 return. So just be mindful that you have to, every property is different, and you have to go in and do your own individual numbers and research on the asset. Now, with Svensson Heights, it has roughly around 1,700 unique dwellings, so it's not a massive suburb, but in the grand scheme of things, like most suburbs in regional Queensland are averaging around 2,500 unique dwellings, so it's a lot smaller than the average. And then when it comes to Bundaberg itself, most suburbs there are anywhere between 1,200 to 2,000 unique dwellings, so I would say it's kind of right in the middle. Like, it's not one of the bigger suburbs. It's not one of the smaller suburbs. It's kind of in the middle when it comes to size of Bundaberg. And you can see here, stock levels are currently at 0.2% and vacancy rates sitting at 0.3. So you're in a suburb here where what the data is saying in terms of online search rates is very high, but then what accompanies that is very low levels of stock. So to me, that's a really good, I suppose, way to diagnose and temp check if a market or a suburb is ripe for investment by looking at these two supply and demand side metrics. And when you have supply low and demand high, that's when you know there is potentially a lot of heat in that market for a lot of short and medium term price growth. Now, I think what's been really driving Svensson Heights is there's been obviously the price point. So there's been a lot of price movement in its neighbouring heights around Branyan, around Avoca, where getting in at $600,000 or less has been difficult in those suburbs. So I think a lot of buyers are looking at these more affordable bridesmaid suburbs like Svensson Heights, like Avenel Heights, and really driving up values in this suburb and really spiking demand. And I think that's been largely driven by local home buyers, but then you sprinkle in the investor activity on top, you can see how these numbers are starting to really take off now when it comes to these online search rates. So I think Svensson Heights has a lot of good things going for it. It's well located. It's got a bunch of good schools in and around the area. You're only a few minutes from the CBD. You're out of the flood zone area as well in Bundaberg. So a market like this, I think, definitely has almost double-digit growth, I would say, in it in 2025, and it could be a great potential place for you to park your money in. So go in and check out Svensson Heights, guys. I think it could be a really good fit for you. Hey guys, this isn't specific investment advice. Make sure you go in and do your own individual research or speak to a buying professional about individual assets in Svensson Heights. But if I had a sub $600,000 budget and I was looking at buying an investment property in Svensson Heights, this is what I would buy. It's been on the market now for a couple of days and it's probably already gone, but this is the type of house that I think is an investment grade asset. So it's on a large block. It has a 4x2 configuration. It has a shed out the back. It's an older established property with the ability to renovate and add value also down the track. And what you find is that most properties in Svensson Heights are about 30 or 40 years old, if not older, because it's one of the older and established areas of Bundaberg. So it's a good area for those that are looking for good land to asset ratio. By that, I mean a lot of value is pent up in the land and not in the dwelling. So the properties, because they're established, the depreciation benefits aren't there anymore. So the dwellings aren't necessarily worth a whole lot, but a lot of the values in the land. And that's what I really like, because obviously land is the thing that appreciates and bricks and mortar depreciate. So when you have that high land to asset ratio, you're generally on a winner there. So yeah, if I was buying in Svensson Heights, I would look at something like this, guys. Now, number two on the list today is a suburb called Boyne Island, which is located in Gladstone. I would say what Boyne Island would be the best part of a 10 or 15-minute drive from the Gladstone CBD, and it's located on sort of the southeast corridor of Gladstone. Now, if we go through the data, so Boyne Island right now currently has 1,170 unique views per property, and this, guys, is extremely high when benchmarked to the rest of the Gladstone market. Like some of the other popular markets over the last 12 months for investors have been suburbs like Glen Eden, Kincora, New Auckland, and Boyne Island. If you actually benchmark, Boyne Island against those suburbs that have been very popular for investors over the last 12 or 24 months, it's probably returning an additional 400 to 300 more unique views per property. So it's really outperforming those markets that were really hot over the last couple of years in and around Gladstone, which is very surprising. And this might be, a suburb that's still on the rise and a market where you could potentially capitalize for 2025. So with Boyne Island, I think what's largely driving that is, Boyne Island, I think it's very close to the beach, and it's very close to a suburb called Tannum Sands. And Tannum Sands, I think, is the only suburb right now where the data looks a lot better than Boyne Island when it comes to online search rates. I think the data is roughly about 400 to 500 more unique clicks per property. So I think a lot of people are now, priced out of a market like Tannum Sands and are looking at places like Boyne Island, which is the next best option that's close to that sort of Tannum Sands beach area of Gladstone. So I think affordability is largely contributed to this, I suppose, upswing in demand and this push for high unique clicks per property for things that go online on realestate.com. So I think, yeah, affordability is playing a huge part. And if you jump online and look at where Boyne Island is located, it's actually not too far from the beach. So I think a lot of people are seeing great value for money there, and I think there is a lot of good value for money there, particularly with that 4x2 bedroom configuration. I think there's still a lot of good buying under that $600,000 price point. And when you compare that to what you can get in Tannum Sands, it's chalk and cheese. And then when you compare that to what you could get in town and some of the more blue chip locations like Glen Eden, Kincora, New Auckland, you're probably looking at chalk and cheese there as well. Like there is a lot of value in Boyne Island right now. I think that's largely attributed to this unique clicks rate. Now, you can see here that it has a median house price of $505,000. Its median rent sits at around that $520 per week. So based on that, you're probably looking at an average yield of around that 5.3% yield. So it's not that great. Like, it's not knocking your socks off. But in saying that, guys, I'm only working off median numbers here. And if you just jumped on realestate.com right now and you looked for properties for rent, I'm sure you're going to find properties that are renting for a lot more than that 520 price point. So just be mindful that you have to go in and do your own individual research and talk to property managers about what things would rent for prior to purchase. But in saying that, guys, yeah, that 5.3%, if you were to just buy the average property there for $505,000 and get the average rental returns, you're getting around 5.3%, which isn't great. But again, and saying that, like, I think it has a lot of growth potential. So if you're someone that has the ability to hold a property with a lower yield, I think there is a lot of growth upside in a suburb like Boyne Island. And you can see here that it has roughly 2,250 unique dwellings. So it's about average when it comes to the size of the suburb compared to the broader Gladstone region. So I think the biggest suburb in Gladstone would be Glen Eden or Clinton, one of those two suburbs, and they've roughly got close to 3,000 unique dwellings. So like it's a good sized suburb. You're not in utopia. You're not in an area where it's small and isolated. No, you're in a relatively nice residential area where there is a lot of dwelling type options there at 2,250 unique dwellings. Stock levels are sitting at 0.4%, so you're in a really low supply environment as well. And when you have this high demand, that's again a great recipe for ongoing capital growth in the short term, but not also in the short term, medium, and long term as well, particularly if those trends can remain the same. And then, yeah, from a rental point of view, vacancy rates are very low as well, sitting at 0.7%. So, no doubt there you don't have a lot of rental competition. So, if you are buying a vacant property there, you know for sure your property is going to be rented when those vacancy rates are that low and potentially rented at a premium as well. So the data accompanying these unique views per property is very good as well. So stock levels are really low and vacancy rates are really low. So for me, like I think, yeah, this could potentially be another good suburb to put on your list in 2025. Now, for me, when it comes to Boyne Island, I see a lot of value still in the 4x2 bedroom configuration there. So 4 bedrooms, 2 bathrooms, 2-car garage on, over 600 square meters of land. I see really good value for money there when compared to markets like Tannum Sands, Glen Eden, Kinkora. Most of those 4 bedroom properties in those other suburbs are selling north now of 650,000 or low 600s, where in and around Boyne Island, you can still get that sub $600,000 buying. And if I was buying in Boyne Island, this is the type of property I would be targeting. And this one here, you can actually see that inquire. See where it says on the top of the photo there, inquired. I actually inquired about this property. I was a bit late to the party. We're just onboarded a client. I just had a quick look and see what's available on the market before we started our off-market campaign with that particular buyer, and I saw this really good one online and I made an inquiry, but yeah, I was way too late to the party. So yeah, with that sub $600,000 budget, if you can find those 4x2 bedroom configurations still in and around Boyne Island, I think that's where the best value for money sits within that suburb, because yeah, those 422s when benchmarked against some of these other suburbs present themselves as really good value for money because they're the best part of 60, 70, $80,000 cheaper. Now, moving on to suburb number 3. Now, this suburb is called The Range and it's located in Rockhampton. So, Rockhampton, for those that don't know the geography of Rockhampton, the Range sits on the south side. So, Rockhampton's virtually divided into north and south. So, you've got the Fitzroy River that divides the north and the south, and the Range is, yeah, one of the more desirable suburbs on the south side of Rockhampton. I'm actually really surprised, and as you can see here, that median house price is currently at $585,000. I'm actually really surprised that it's still under $600,000 because it's definitely one of the nicer areas of Rockhampton where properties can range between, as low as 450,000 and sell as high as $2 million. So it's a suburb with a lot of price elasticity, and I'm very surprised that it's still under $600,000. So with that said, I think it could potentially be a great opportunity if you are an investor looking for a rather blue chip type suburb still under that $600,000 price point. So we can see here that the Range has roughly 1,500 unique views per property. So for every property that goes online, that's kind of what the demand looks like, from a click rate point of view, which shows that, yeah, like very, very strong demand. And when that's benchmarked against kind of the broader Rockhampton market, it's probably outperforming the market by at least 200 to 300 clicks when compared to those other suburbs. So it's definitely a market that's outperforming. And I think what's largely driving that is obviously, as I said, it's one of the nicer blue chip areas of Rockhampton. So I think that's definitely attributing to this high click rate. You know, a lot of owner occupiers want to be based in and around the range, particularly if you're working at around the school and hospital precincts. There's some really good schools in the range district, as well as the public and private hospitals. So it has a lot of those professionals need to be based there, you're at really good sort of close proximity to those big job hubs and those really nice schools. So I think that's, you know, by and large what's really driving that. And as I said, a lot of those property prices can be north of 600,000 up to 2 million bucks there as well. So I think for investors, you know, if you can still get into the market and under that $600,000 price point, I think you're going to be in a very nice location and in a market where, as I said, a lot of price elasticity exists. So the median house price right now is $585,000, and its median rent sits at around $517 per week. So you're roughly getting about a 5.3% yield. But again, here, guys, I'm working off median figures. I think there's not a whole lot of rental stock available in the range, but from what I've seen and from the properties that we've bought in the past in the range, like for your standard sort of 3 bedroom, 1 bathroom, or 3 bedroom, 2 bathroom property that's under that $600,000 price point, you're looking at roughly around sort of $550 per week rent to $650 per week rent. And then obviously the ones that are a lot cheaper in nature, particularly the fixer-uppers or the older established Queenslanders and cottages, tend to be at that lower rental price point. But I think the average property returning roughly $550 to $650 per week rent tends to be that 3 by 1 bedroom configuration. And I'll show you an example of what that looks like next. So yeah, 5.3. Look, it's not exactly knocking your socks off, but as I said, you're in a really good blue chip location. I think that has a really good track record historically. Has some really good job hubs surrounding it. Has that upper middle class and upper class demographic. You know, the discerning, wealthy people that live around Rocky tend to be based in and around the range as well, spending upwards of $1 million in and around, you know, certain streets like Agnes Street is one of the nicest streets on the range. What else have you got there? I bought a couple in and around Agnes Street before. You've got streets like Corbury Street as well. That's one of, you know, the other nicer streets on the range where houses sell, you know, upwards of $2 million. So yeah, there's a lot of really nice streets in and around the range. And what you'll actually find is that it's one of the older established areas as well that's completely built out. So you got no new supply threats because there's no new land availability. It's also elevated, so you're outside of the flood prone areas of Rockhampton. So you're well buffered from that perspective. And then what you'll actually find is majority of the stock there is sort of your older character homes, so your older Queenslanders. And what I'm seeing on the ground in suburb like the Range is a lot of people are buying those older character homes and retrofitting them, and they're the ones that are, you know, when they're going to sell, they sell at really premium prices because of their, I suppose, retrofit with the newer bells and whistles, but they've got the older character of a Queenslander or cottage. So from a size point of view, it has roughly 2,150 unique dwellings. So like it's an average size suburb when it comes to, you know, the various suburb sizes in Rockhampton. So that dwelling to search ratio is very good there as well. Like 1,500 unique views and only what roughly 2,100 dwellings in the suburb. And then looking at some of this other data, you can see here that stock levels are sitting well and truly under 1% at 0.5 and vacancy rates at 0.6. So all the data here that accompanies this online search interest rate is very, very good as well. And it could potentially be another suburb for you to put on your list to capitalize on in 2025. And as I said, I'm very surprised that you can still get into the range for under $600,000 because it is a really nice area in Rockhampton. Now, if I had that sub $600,000 budget and I was buying in the range, I would be buying something like this, which is just under 600 square meters of land. You know, you generally want above 600 square meters, but in a suburb like the range, you can get away with a smaller block because it's completely built out and established. There's no new land availability. There's no land abundance, so land is relatively scarce there. So I think, under that 600 square meter land size isn't a big issue. You don't want to go probably as low as 400, but I think if it has a 5 in front of it, you're still doing all right for a suburb like the Range when it comes to land content. So I would buy something like this, which is a 3x1 on, yeah, just under 600 square meters, and yeah, looking for offers over $530,000. So that's likely to push up to around that mid five selling price. And as you can see, like it's like a combination of brick and what is that, weatherboard, I think, or hardy plank. And what you'll find is a lot of those properties that will fall into that sub $600,000 price point would look like this, either in the configuration or build type. And I think a lot of these ones, yeah, they've got really good uh, upside potential when it comes to long-term capital growth, because again, they're in that scarce, built-out area, relatively blue chip location, and they've got the capacity to renovate down the track as well. So you can retrofit these, add another bedroom, interior changes, bedrooms, bathrooms, kitchens, and when they come out after renovation, they are generally very, very nice properties. So I'll be looking at something like this, guys, and I think that's where the best value for money sits in the suburb, because if you can still get your hands on this, that's really good buying, because as I said, majority of the stock that sells in the Range is upwards of 600,000, and it can be as high as $2 million. So that sub $600,000 buying is, while you can get in, I think, there's a lot of really good upside there to be made. Moving on from Rocky and heading north to a suburb called Andergrove, which is in Mackay. Now, Andergrove, for those that don't know, Mackay probably sits, I'd say, roughly 10 minutes from the CBD of Mackay across the Pioneer River, and it's on the northern end of Mackay. It's not necessarily on the northern beaches, it's more one of the northern inner middle ring suburbs of Mackay, and a rather nice area there as well. So we can see here that Andergrove has performed really, really well, and it's probably outperformed every other place we've looked at so far when it comes to online search interest rates. So for every property that's going online in Andergrove, it's getting roughly 1,615 unique views per property, which is extremely high, right? And it's not only outperformed all those other areas we've covered today, but if you actually benchmark this to the rest of Mackay, yeah, it's also outperforming the rest of Mackay by at least 200 to 300 clicks per property. So you can see that Andergrove is very much in very strong demand. And look, I think what's largely driving the Andergrove, I suppose, high search rates is, I think it comes a lot back to um, Andergrove being still in that really affordable price bracket. And what I'm finding is a lot of people are pushing into Andergrove to target more of the older established stock that's generally under that 550 price point, that's been built in the sort of the last 30 years or more. And what you'll find is a lot of those older Queenslanders or combination builds of brick block and then weatherboard or hardy plank at the top have been very, very popular in this suburb, because if you actually push sort of further north and to the left and right of Andergrove, what you'll find is a lot of the other suburbs in and around Andergrove tend to have a lot of the 4x2 bedroom configuration brick homes that are more modern. And what you'll find is that majority of those properties to get into now in Mackay, you're looking at 600,000 plus. So in places like Ruralview and places like Mount Pleasant, Bacacia, pushing further north in and around Blacks Beach. If you wanted to live on the north side and you want like your typical 422 brick home, very hard to get in those suburbs. So people are pushing into markets like Andergrove and targeting these more affordable properties. And look, I think the 4x2 brick configurations in and around Andergrove are pushing up around that 600 plus now, but there's still a lot of affordable stock that aren't your typical brick home. That's where I think a lot of the interest is gravitating towards. And in and around Andergrove, it's 10 minutes from the CBD. You're probably looking at 10 minutes from Slade Point to the beach, a few minutes from the harbour. So it's got a lot of good things going for it. A few good schools in and around the area, not too far from the Mater Hospital as well in North Mackay. So it's got a lot of good things going for it from a location point of view that I think has really driven this unique click rate to such a high number. Now, looking at the suburb metrics here, so we can see that the median house price is currently at $517,000, and as I said, I think that's one of the more affordable suburbs still in Mackay. So most of the stuff, that is more modern is selling for around that 600 plus. But what I'm finding is a lot of the older established areas like Andergrove, North Mackay, parts of East Mackay, parts of Slade Point, you can still get a lot of affordable properties under that $600,000 price point. But you've got to really shop around, I think, for the ones that are in really good condition, the ones that I think are what I would call investment grade assets. And look, at that 517,000 price point, I think those properties still have a lot of wiggle room to grow. And one of the great things I like about some of these affordable properties in and around Andergrove is that majority of them are renting for really good money as well. And as you can see here, the median rent in the suburb of Andergrove is $595 per week. So if you bought the typical property there for $517,000 and it was renting for close to $600 per week at $595, you're getting a 5.9% yield here. And look, this is the case for most of Mackay. Their yield is pretty solid all round, and because the rental market is so hot right now and there's so much upward pressure on prices, even the oldest established stock, like what you'd get in Andergrove for under $550, are renting for close to $600 or more. I looked at a house in Andergrove this week off market, and it was probably 40, 50 years old, but it's in really good condition. It had a renovation about 8 years ago, vacant possession as well, and they wanted about $520,000 for it. And when we got the rental appraisal for that property, it was like $620. So a ridiculous yield that property had as well. So that's one of the great things I like about Andergrove. You can still get in for that under $600,000 price point and have a yield very close to that 6% mark, which is great if you want to buy an old investment with very little outlay. Now we can see here from a dwelling point of view, it has 4,475 unique dwellings, so it's one of the bigger suburbs again in and around the Mackay region. Stock level sitting at 0.3%, so well and truly under that 1% mark. Looks very good from a supply point of view. So you have really good demand side metrics there with the high level search rates online, and then you've got really low levels of supply. So that's still, the right ingredients you want to see for capital growth in a market like this. And then you have these vacancy rates, well and truly under 1% as well at 0.6%. So Andergrove, look, it's certainly a suburb where demand is very high and supply is very low. And the numbers are really, really good all round when it comes to really attractive yields and then that really affordable purchase price to get in. But as I said, you really got to shop around for those good deals under that $600,000 price point, because as I said, you're more looking at those older properties that are 40, 35 years old. Queenslanders, cottages, weatherboard, brick block homes, as opposed to your generic 422 that's sort of been built in the last 25 years. They're very hard to get your hands on now for sub 600,000, not only in Andergrove, but the broader Mackay region as well. Now, as I said before, it's very hard to get your 422 brick home built in the last sort of 10, 15, 20 years in Andergrove now for under that $600,000 price point. So yeah, it makes buying very difficult for that type of dwelling. But in saying that, I think there's a lot of good value for money with these combination builds. So these combination properties where you got this lower level floor, right, that's made up of a brick base, and then upstairs you got sort of this hardy plank or weatherboard combination build. And I think those ones right now in and around Andergrove, and not only in Andergrove but in some other suburbs in and around Mackay as well, are the best value for money right now. And this is what I would be spending the best part of $550, sub $600,000 on, because if you can get the ones, particularly the ones that have legal height underneath, then that gives you the ability to have that inhabitable space down the track and build out a bedroom, put a kitchenette downstairs, and potentially have a dual income property. But not only that, you increase that inhabitable space and floor area, which means you can charge higher rents as well. But I really do like these ones, and if I was buying in and around Andergrove, I'd be buying something like that. 48 Maguire Street, Andergrove, on the market just the other day, 3x1 on 865 square meters of land. That's another good thing about Andergrove as well and buying these older established properties, what you'll find is the block sizes are very, very generous. Because if you actually look at a lot of the newer builds in and around Andergrove, some of the block sizes go as low as 450 square meters for a brick home. That's 422. So I prefer something like this with side access, residual land out the back for the ability to add a pool, granny flat, store goods like boats and toys and things like that. They just present so much more upside potential. And look, this one is for offer right now by negotiation, but I think that's definitely going to be under that $600,000 price point. I think this one's likely to sell between sort of that 560 to 580 mark. Now, number 5 on the list is a suburb called Mooroobool, and Mooroobool is based up in Cairns, far north Queensland. Now, for those that are unfamiliar with the Cairns region or the Cairns city itself, so Mooroobool sits, I would say, as an in a middle ring suburb, probably the best part of 10 to 15 minutes from the CBD of Cairns, maybe about a 10 to 12-minute commute from the airport, and roughly, I'd say 20 to 25 minutes from the Cairns northern beaches. Now, we can see here that Mooroobool's been very, very popular of late with roughly 1,621 unique views per property. So again, very, very high in comparison to those other suburbs we mentioned and doing, yeah, very, very well. Good numbers. Now, I think when it comes to, a suburb like Mooroobool, what's driving that? It's an interesting one because Mooroobool, for the most part, particularly the last, decade and a half, is that it's been known predominantly as a lower socio-economic demographic suburb of Cairns, which is more rough, very high crime rates, can be a bit of a headache if you owned an investment property there. But I think of late, I'd say post-COVID, the last 5 years, the tides have really started to turn in certain parts of Mooroobool, like particularly like the older established parts of Mooroobool away from the higher density public housing areas. That area is now shifted predominantly from older blue collar families, like lower income earning families, to now first home buyers and younger families. And I think a lot of them have pushed into this market because Mooroobool, despite it having a lot of its downside around the demographic in the immediate area, it's got a lot of good location benefits because, as I said, you're not too far from the CBD, you're not too far from the beaches, not too far from the airport. You're sort of smack bang in a position where you could shoot onto the south side of Cairns and be in the South Cairns corridor for any job hubs around that South Cairns area. So, like Mooroobool, it's very well located, and if you actually look at Mooroobool, like its median house price currently $575,000. Some of its surrounding suburbs are very much blue chip, right? So Canimbla, just north of Mooroobool, you're looking at like entry level, like almost 800,000 to get into like your average property in Canimbla. It kind of sort of not too far also from a market like Edge Hill, which is a very blue chip upmarket area. Whitfield, again, you're looking at 700, 800, 900,000 to get into those markets. And then if you sort of look slightly south in places like Bayview Heights, where Mooroobool kind of intersects with as well, you're looking at the best part of another $600,000, $700,000, $800,000 to get into that market as well. So Mooroobool is very well located and it sits right against some really big heavy hitters in the Cairns marketplace, and I think that's why a lot of people have started to gravitate towards it because they've just gone, well, I'm going to overlook some of that demographic here and the lower socio-economic problems that exist here, and I'm just going to purely invest here and buy here for the other benefits because I think Mooroobool can be a great beneficiary of what I call the price ripple effect, being a bridesmaid suburb right next to a well-located blue chip suburb, and the price ripple effect is likely to spread into a market like Mooroobool. And in fact, our Tropical Life office in Cairns, we've probably helped, I would say, about 8, 9 people last year get into Mooroobool, like first home buyers as well as investors, as well as people moving from interstate, and they've all had a budget under that 600,000. When we asked them where do they want to be, they said, we want to be in and around Mooroobool. So our job was to make sure that they, bought in the right pockets of Mooroobool. So yeah, you can get it very wrong in Mooroobool, if you are buying there, because it does have a lot of, as I said, high concentration areas of public housing, government housing, Indigenous housing, and then it also has a lot of median density accommodation as well. So you've got your big complexes like full of apartments and townhouses at like 300 units per complex, right? So you've got a lot of competition there, particularly for rent. So that's something you need to be mindful of as well if you are investing in somewhere like Mooroobool, is that there is a whole lot of rental competition as well because these other dwelling types exist in that suburb. Now, if we looked at that median house price, 575,000. Look, you can still get into Mooroobool for under 600, and I think you can buy something pretty solid, providing you get into those really good pockets. As I mentioned before, there's a couple of rough pockets, but if you can stay away from those bad pockets, I think you'll do all right. And then Mooroobool actually has like a really nice pocket where most houses to get into that immediate area of Mooroobool, I think they call it Mooroobool Heights from memory. City View Heights, one of those. This is a small estate within Mooroobool, and it's like 800-900 up to $1 million just to get into that pocket. So I think that pocket has really done a lot of heavy lifting and dragging up the median house price as well. But what I'm finding is a lot of properties that are close to that pocket where that premium part of Mooroobool exists are really starting to take off now as well. And there's a couple of those little areas that are really prime for investment, I think. Now, if looking from a if you look at the suburb from a rental point of view, you can probably get about $545 per week, resulting in rental yield of around 4.9%. So it's not the best rental yield, but look, Cairns is very, very tight when it comes to vacancy rates, and it's one of the more tighter rental markets in regional Queensland. So again, go in and do your individual research, because what you'll actually find is there'll be certainly properties within Mooroobool that will be renting a lot more than that $545 per week. Some of the ones that we bought last year were renting like for $650 and above, and we purchased them for around that $550 purchase price. So make sure you just go in and do your individual research. From a dwelling point of view, 3,280 unique dwellings, so it's one of the smaller suburbs in Cairns, but it's also one of the older and established suburbs as well. So that's a good thing about it. You're kind of in an older established area, well buffered from like land supply or land abundance. So there's not going to be a flurry of new estates and house and land packages being pumped into this area. The only concern around Mooroobool is like the median density expanding, so more units, apartments, and townhouses popping up in that median density zone area, because that can create additional competition as well. That could be a potential supply threat to your property down the track when it comes to renting your property. So I think that can certainly be an issue and something you just need to buffer yourself away from, and maybe try and get away from that higher concentration of where those median density housing opportunities exist in and around Mooroobool. But it could also be an area you could target, particularly from a land banking strategy. If you went and bought something in and around Mooroobool that could be zoned for median and high density down the track, you could potentially then sell that parcel of land and cash into a developer, because that's a place where a lot of that sort of median density opportunities are popping up, and it could be a good land banking opportunity. Supply there is very, very tight. Look at that, 0.3%, and vacancy rate sitting at around that 0.8%. So some of these other metrics, when you look at the suburb profile of Mooroobool, are looking very, very good there also, guys. So yep, definitely one to consider. And if you are navigating this market, trust me, navigate Mooroobool with extreme caution, because it can go wrong very quickly there in that suburb if you get it wrong, because there's some really rough patches in that suburb. Now, if I was buying in Mooroobool, I would buy something like this. Number 6 Mosh Place Mooroobool, which sold last month for $500,000. I think this is a pretty good buy. It's a 3-2-4 configuration property on 749 square meters. So I really like in and around Mooroobool, you can get these older properties on these larger blocks as well. And If you get these low set brick homes like this, what you'll find is the floor plan is very generous. Like the floor plan and the floor area under roof is really good. They're generally open plan, larger bedrooms, big living spaces, big dining areas, big kitchens, and quite generous even with their patio sizes. So these older homes tend to be very good from that sense. So what that means is down the track, if you are to renovate them, you have such a good canvas to work with. Overall. So look, I thought this was a good buy. And if you can pick up like either these brick homes, like these lower set brick homes that are sub 600, that are either 3 or 4 bedders, I think you're going to do pretty well as an investment. And then what you'll find is there's these like older combination builds as well, similar to what I showed you in Andergrove, where you get that sort of brick base and then hardy plank or weatherboard on top. You get a lot of those in and around Mooroobool as well. And sometimes you get an old Queenslander or cottage as well. But yeah, if you can get these bricks, either 3 or 4 bedrooms, you're going to do pretty well in Mooroobool, providing you've nailed the pocket. And where this house is located, behind the Raintree Shopping Centre, in and around like a couple of really nice little leafy green streets in there, I think have a lot of upside potential in the future. All right, the last lucky suburb I'm going to cover off today, guys, is a suburb in Townsville, and the suburb is called Kirwan. Now, for those who aren't familiar with the Townsville region, so Kirwan's located, I would say, on the inner northwest of Townsville, and I would say as the crow flies, roughly 10-15 minutes from the CBD itself, depending on what part of Kirwan you are. I think if you're on the eastern side of Kirwan, you're probably looking at more of a 10-minute commute, and if you're on the western side of Kirwan, you're probably looking at more of a 15-minute commute into town. Same would go to the airport. You're probably roughly around 10 to 12 minutes from the Townsville airport. And then going north to the northern beaches of Townsville, you're probably looking at about a 10-minute commute also. So from a location point of view, Kirwan's sort of smack bang right in the middle of Townsville, and it takes up a large portion of sort of the inner middle ring landmass of Townsville. It's such a big suburb, and as you can see there, like I put there, it has 8,800 unique dwellings. So it's one of the biggest suburbs in regional Queensland. If not, it would go close to the biggest. I've got to look at the numbers there, because some of the suburbs we've compared, if we compare the dwelling number to some of the suburbs I mentioned today, it's like 3-4 times bigger than some of the suburbs we covered off on today. So Kirwan, as I said, it's one of the bigger suburbs and makes up a big portion of that inner middle ring part of Townsville on its northwest corridor. Now, for Kirwan, we can see the numbers are through the roof, right? 2,314 unique views per property. So yeah, it's a really hot market, and to be honest, it's been a hot market for the best part of the last 2 years now, and probably a very polarizing market as well, or suburb, because it's been subject to a lot of commentary from a lot of different, I suppose, property experts. Um, People out there that are well known in the property investment space have really pushed Kirwan, and a lot of people have come into this market, particularly investors, and have done very well over the last couple of years. But I suppose for you as an investor right now, you need to understand whether or not this is still a good suburb for you, particularly if you are to come in and not be too late to the party. And look, for me, I think Kirwan, for the most part, still at that $560,000 median is really good value for money. Such a big suburb, such a nice suburb of Townsville. I still think, based on comparables, not only within the market of Townsville, like Kirwan being relatively affordable to some of the more upmarket areas like Mount Louisa, Adalia, uh, Bowley Plains, like Kirwan, I still think offers really good value for money. But then when I compare a suburb like Kirwan to, let's say, a suburb down the road in Cairns that is very similar, let's say a suburb like Redledge, for example, would be a very similar type suburb to Kirwan, and you're looking at sort of $200,000 difference in median house price. So I think Kirwan has the ability in the short term to even push to around that $750,000 price point in certain pockets, more consistently. We're seeing a lot of sales now in Kirwan, particularly that 422 configuration push above 600,000. So if you're after like a generic nice 422 brick home built into the last 20, 25 years, you're going to really struggle with that $600,000 price point. But there's still a lot of good buying opportunity under that $600,000 price, particularly with those 3x2s or 4x1s or some of the more older established stock and some of the sort of pockets that aren't the most desirable still have some really affordable opportunities. So you can see, yeah, that house price at $560,000, I think, is still really good value for money. And I think what's really driven the Kirwan market over the last couple of years, I think, yeah, a lot of investors have come in and really pumped up the tires there, and it's really beefed up that median house price, and it's really put pressure on rents as well. But at the same time, like Kirwan is still a well-located suburb, and as I said before, you're not too far from the city, you're not too far from the northern beaches, not too far from the airport, you're not too far from all the various job hubs on the west side of Townsville, and then obviously on the east side towards the CBD. You're clustered in and around some really good public and private schools. So for the most part, yeah, Kirwan has a lot of things going for it. Hence why I think it's been such a popular place to buy. And like my guy on the ground in Townsville, he goes out to a lot of the open homes and private inspections and things like that on the ground. And yeah, he said it's packed all the time. Like the ratio, like home buyer to investor ratio is still around 80%, and that's what you want to see, where like 80% of the active buyers right now want people that wanted to live in that suburb as opposed to invest. So you know that the market has really good ongoing stability there, and that's something that we've seen on the ground in a suburb like Kirwan, despite it being sort of highly polarized suburb when it comes to buying an investment in over the last couple of years by various property commentators. Now, one of the things about Kirwan, and this is more of a reflection of, I think, the broader Townsville market, is that the rents are pretty crap. Like, I think on average you're probably getting around, yeah, anywhere between 520 as a median up to around 550 for like the older stock and the 3 bedroom properties, and then some of the more well located 4 bedroom, 2 bathroom brick homes, the newer ones, the boutique bills, are probably getting anywhere between sort of 600 to 650. So that's one of the bad things about Townsville, is that house prices have accelerated, very fast over the last few years, but rents haven't followed. So you're in a situation now where you're kind of paying a premium to get into the marketplace, but you're not getting those premium rents there. So based on that purchase price of 560 and returning 520 rent, you're looking at about a 4.8% yield, which isn't great, right? And like we looked at one property this week in Townsville. It was a 3 bedroom, 2 bathroom, 2 car garage property on 800 square meters, had a big shed at the back. Like it was really nice. It was mint, but when we ran the numbers, it just didn't work. So we could have picked that up for around that, yeah, 560, 570 mark, but it was only returning around that 550 per week rent. So it was like a really low 5% yield. And then obviously when you start to take all those other outgoings out, like high insurance costs, you're looking at roughly about 4,000 per annum, and then you're looking at like council rates are like $4,000 per annum as well. You start to really eat into that like low 5 yield, and then by the time you take everything away, your net yield ends up to be like sort of mid 4s or even high 3s, in certain parts of Townsville. But look, if you were lucky enough to get in a few years ago, I think you're in a really good position, because you could have got in at like those really good affordable prices, and your property is really close to being positively geared. But now it's very hard to get kind of in and around that 6% yield in Townsville. That's just something you have to be mindful of as an investor if you are looking to buy there. That holding costs are very high, and your net yield position is probably going to be very low. So that's just something you need to be mindful of. Now, Kirwan, as I said, is one of the biggest suburbs in regional Queensland. It takes up a large portion of that inner northwest part of Townsville, 8,813 dwellings. So what that means, guys, is that given it's such a big suburb, right, you need to make sure you navigate it with caution, because then that suburb is divided up into various little pockets. And I think the challenge for you as an investor is make sure you nail the right pocket, because there's a few rough little pockets of Kirwan, some that are sort of on the fringe of being flood affected, some that have sort of a high concentration of government housing, social housing. So if you end up in those areas, like, you're not going to do well. So I think the challenge for you as an investor is to try and get as close to some of those really nice pockets of Kirwan where houses are selling upwards of $600,000, and try and get as close to them as possible. But despite it being such a big suburb, like the data overall looks pretty good. Like its stock levels are really, really tight. So for such a big suburb to have like well and truly under a 1% supply rate is very good. So you have really high demand, really low levels of supply. Like that's the perfect recipe for capital growth, right? And then the vacancy rates are, not overly impressive, but to still be around that 1% mark for such a big suburb is quite healthy, I think. And when you follow the vacancy rate trend, like previously, like going back 5 years, like it used to be around that 4 or 5%, which was a big concern. But over the last couple of years, it's really started to trend downward now and starting to really tighten up. And I think once it gets under that 1% vacancy rate, I think um, we're going to see a market like Kirwan, really start to return some premium rents, and that'll be a really good thing because if you go in for that under $600,000 price point and you get upwards of $650 per week, you're going to have a really good asset there that you're holding that's going to be close to that 6% yield there, guys. But yeah, Kirwan, it's still hot, guys. I think it's still got a lot of steam in the engine. I reckon that can get to about 750 over the next couple of years, and you can make money, particularly if you buy the right asset here. That's for sure. Now, as I said before, it's probably going to be very difficult to buy like your typical 4 bedroom, 2 bathroom brick home that's been built since sort of the last 20, 25 years in Kirwan now. Most of them are low sixes, mid sixes, even high sixes for the really nice ones. So you can probably kiss that goodbye if you're operating with sort of a sub $600,000 budget. But where I see really good value for money in Kirwan is like these older Queenslander type homes, like the combination builds, like the dual occupancy living properties. Most of them have a configuration of 3-2-2, like they're 3 bedrooms, 2 bathroom, 2 car. But one thing I like about them is that you can still pick them up for around that mid to low 500s, and the better quality ones that are more nice or recently renovated are like high 500s, low 600s. So I think this is where really good value for money sits within the suburb. So these ones, as well as the 322 brick homes, and if you can find the 322 brick homes on 600 square meters or more, I find that a lot of them are sort of selling for like mid fives now as well. And I think these ones, as well as the brick ones, are the best value for money in the suburb right now. And I think a lot of these ones, if you pick them up for mid fives, I think they can get to mid sixes very quickly in the next couple of years. And there's some short term gains to be made here. But that's what I'll be buying, guys, if I was buying in Kirwan. All right, family, thank you for tuning in today. My name is Troy Simbassini again, owner and head of research of Life Buyers Agency. I suppose if you're an investor today and you got some value out of what was on offer and what was shared today, look, I'd appreciate if you liked and shared this video. If you also have any questions or queries, feel free to leave a comment in the comment section. I'll make sure I circle back and get those answered for you as well. And look, I hope this has given you some little gold nuggets or clues as to where to potentially start to, look at if you are, operating with that sort of sub $600,000 budget. Because I think all of these suburbs have the potential to do some really good things in 2025 and beyond. And I think there's definitely money to be made here. But if you are an investor and you're probably, after this video, still feeling unsure about what to buy, when to buy, where to buy, feel free to reach out to me and the team here. You can give us a call on any of those numbers there, visit us on those websites and book a call with me and my team. And we're more than happy to just to have an initial chat to see if we can add value to the journey, guys. But look, my name is Troy Simbassini. I do this content just purely out of community service content. What I call it community service content, and it's just for my enjoyment and just for me to sort of keep my between the ears sharp as well. I really like putting these together because I'm always looking at the data as well, and at the same time it really just helps me provide a high quality service to the clients as well. And we're always looking at this data, and I love to put this stuff out there as well because I think it's going to really add value to a lot of you guys out there looking at navigating this market, particularly if you are geographically challenged and trying to buy from capital cities as well. I know how that could definitely be and feel very difficult sometimes. But guys, overall, like and share, and I'll see you on the next video.